Every time I flick the wrist, you can bet that it's a switch. Realtor for hoopers, welcome to the main event. I'ma give the people what they ask for. Whole squad moving like a task force. We move with military precision, accomplishing any mission. In 2020 division, just don't see no competition, don't see no opposition. We on top of the game, we not one and the same. I'm Stephen Curry, the range, I Allen out with the cross. I'm Kobe Bryant, the fade, I'm one that's calling the plays. Now what else more can I say?
All right, welcome to the first episode of the Mortgage Podcast series. My name is Adam Kemp, aka the Realtor for Hoopers. Today, I have Joseph Selander with Edge Home Finance and Kristina Fischer with Universal Lending with me. And we have created a podcast series to answer your questions on mortgages, whether that's how to pick a lender, rates, just the market in general. We wanted to answer your questions to make every real estate transaction that you have going forward just a little bit easier. So with that being said, welcome, Joe and Kristina. Thank you for being on this panel.
Thanks for having us.
Good.
Yeah.
Well, so I wanted to kind of explain the format of what we're doing here. So we opened up all of our social media accounts, emails, all of our networks, and we just asked the people in our network to submit a question that they have about mortgages. And so rather than us having one of us answer your question, we figured it'd be an awesome thing to have a kind of an open forum panel discussion on it. Mm-hmm. So that's what we're doing here, and we will get to those questions. But before we do that, I wanted to open the floor so you can learn more about Joe and Kristina. These are two mortgage professionals that I use and refer business to in Colorado, people that I trust and I know that are going to take care of their clients. But I'll start with you, Joe. Joe Selander with Edge Home Finance, like I said. If you could tell us a little bit about your background as a mortgage professional and also maybe something cool and unique about yourself.
Okay. Well, thanks for having me, Adam. I got into the mortgage business in 2003. So back then, you could have a business card that said you were a mortgage broker, and you were a mortgage broker. It was definitely the wild, wild west, and everybody was doing it. And it was kind of a wild, crazy time to get involved with the business. Obviously, in 2007, 2008 is where we lost, probably 90% of my competition. Those were actually some of my best years. I stayed with it. Kind of all the crack dealers got out of the business. All the people that just, were just selling points and they were just selling rates. They were never an expert. They got out of the business, and I kind of kept my licensing. I did what I needed to do to meet the regulators' expectations. And I think the Lord just kind of blessed my business from that time on, from 2003 on. So I'll be, basically 23 years in the business at the end of this year. I love it. I love helping people out. I think I came from a background where I saw a lot of, bullying and racial bullying growing up. And I think I've always kind of had this mentality of I really want to help out people that just don't get a fair shake. And so I think that comes out of my business. Part of being a loan officer is that you're really fighting for your buyers. You're really fighting for your borrowers. You're really advocating for them. You're really teaching them how to get around some of these potholes. And it just feels so good at the closing to get that hug or that, handshake of just like, thank you for guiding us. Thank you for getting us past these evil underwriters. I'm kidding. I have many good underwriter friends, but they're kind of evil. And then I think, probably just something interesting about myself. I mean, staying with the Realtor for Hoopers thing. I was able to play basketball, through college, and I played at Claremont McKenna, which is an NCAA Division III. We were all below the rim, but we sure fought hard. And let's see, I've been playing adult league till 40. I retired. I'm 49 now, but I do love basketball. I love your brand, and I think that's really cool to just be a part of all this.
Thanks. And little history of Joe and I's relationship. We first met playing on a men's league basketball team through a common friend, and now we have transitioned to be from being basketball friends to being golf friends. So
that's right. So much less painful.
Yes, for sure. All right, Kristina, same questions to you.
Yeah. Hi, my name is Kristina. I'm a mortgage advisor. I've been in the industry for a little over a decade now, so going on about 12 years. Kind of like my background, my mother was a single mother. And so really kind of seeing the scarcity and the hustle mindset and just like the survival of trying to survive in a world. And falling into lending, it really just gave me an access point, one, to just honor my own journey as a woman, and also just empower clients and others to be able to have an access point to be able to do the same. And knowing that, like, really just focusing on taking out the overwhelm and the anxiety around money and real estate, where they can really build wealth without feeling lost or anxious. Because I feel like just in my own journey, there's not a manual, there's not a roadmap on how to acquire real estate, how to build wealth, how to really make that happen. And so really I just try to really make it accessible for clients, and really just break down the barriers and really help bridge the gap of just generational poverty, and help communities really be able to get into a position of wealth building. So, and a little bit about me: I'm a longtime dancer, fire performer, circus acts, all of the things, and really into a lot of like holistic and mindful modalities. So I really love incorporating a lot of that into the realm of financial coaching. And so over the past decade, not only am I helping clients in the mortgage space, but also just really bringing the aspect of financial coaching and like really helping people with that mindset, and kind of that financial strategy. So, and yeah, I've recently connected with Adam maybe a year or two ago through the web of amazing connections, and here we are.
Yeah.
So really, really grateful to be here.
All right. Well, this is the part of the show where I get to kind of sit back and let these professionals answer your questions. So I will chime in where I need to be, but again, these are mortgage questions, so I will let the mortgage professionals answer most of them. So the first question we got submitted was through Instagram from Katie Kemp. And Joe, this is going to be a question I'm going to open up to you first. The question is, what should I be asking that people don't know to ask when picking a lender?
Yeah. So I think probably the first thing I think that separates a lot of brokers, whatever you want to call us, loan officers, mortgage brokers, you're going to have kind of like what is like the retail channel, and you're going to have a broker channel. I think that that's a pretty important thing to differentiate. So, if I go down to Cherry Creek and I buy a suit, I walk into this place, they've got stuff up my inseam. They're measuring stuff. We've got cucumber water. I'm going to walk out of there. I'm going to pay $1,000 for the suit. And the reason that I'm paying that much is because why? I got pampered. I got treated like I was really maybe special or something like that. But the end all product probably really wasn't that expensive. Whereas a broker, which I am, now you're talking about somebody that maybe is like outside sales for all these different warehouses from India all the way to America. And I'm bringing the suit to your door for maybe $365, right? So you got to kind of figure out what you want, how you want to be serviced. Are you somebody that, you're looking for a good deal at a good price? You want to get it done a little bit cheaper without all the fluff, without all the middle people, without all the middle managers involved? Or are you a person that's like, look, I kind of want to walk into the bank. I want to see the mountain views. I want to be, offered some water. I want to be pampered a little bit, and I don't mind paying a little extra for that. Okay. Well, that's probably first and foremost. I think after that, you're looking for obviously, how competitive are your rates? Let's talk about your rates. Let's talk about the A fees of the loan estimate. How do those compare with the A fees of other lenders and their rates? Obviously, the A fees in a loan estimate, which obviously converts into the closing disclosure, that's really the major shoppable piece of a lender, the rate and the A charges. Okay, that's important. Obviously, price matters. I think after that, you got to be looking into expertise. I think a good question, and this is a biased question on my end, because I think this is something that when I do feel somebody really shopping me, when I do really feel somebody being like, look, it's coming down to you and this other person, and I just don't really know what to do here. I know one thing I always kind of say is, hey, we already know I've got rate, I've got closing costs, I've got price down. We know I've got expertise. I've been doing this for 23 years. I really think that something that's important, and we can even parallel this to basketball, is being in professional shape, right? If this other mortgage broker does one deal a month, are they really in professional shape? Are they really doing the 6 to 7, 8 deals that I'm doing a month that keeps me professionally fit, right? everything from using ChatGPT to really understanding the guidelines to really understanding the pitfalls and being like, oh my gosh, we literally just had this problem a week ago on this other file, and now I know how to navigate that, right? And so I think those are kind of like my major things is number one, where are you in the spectrum of, retail all the way to broker? Where are you in your expertise? Where are you in your rate and closing costs? And where are you for your professional fitness?
I guess I'll have a follow-up question to that. So when you were kind of using the metaphor of Cherry Creek suit shop versus a broker delivered to your door, just to clarify, you're saying that like the retail space and the mortgage side would be the more like Cherry Creek suit shop, there for the experience, there for just the overall feeling that to be serviced at an extremely high level versus the broker is going to be more delivered to your door, more unique, specialized to that specific file, correct?
100%. Yeah. And I think the crossover years were probably right around 18 and 19. As a mortgage broker, you probably wanted to be a little bit more in the retail space back then with all the regulation and all the things that they did to just basically beat up mortgage brokers after 2008, right? The government wanted to blame all of that on the mortgage brokers, which was kind of ridiculous. I mean, we were selling their heroin, right? It was their Fannie Mae, their Freddie Mac. They were the ones who messed up. Mortgage brokers are just mortgage brokers. We're just salespeople. We'll sell anything. You could make that case. Well, in 18 or 19, that's when things started really shifting over and the broker world became more refined. Their websites, their portals, their ability to work with just a broker straight away became so much more refined. And now it's like one of those places where, in my opinion, again, this is my bias, I think brokers have things better now. Here we are in 2025, and brokers are becoming the fastest growing thing for mortgage brokers. They're leaving the retail space and going to the broker space so that they can have price, that they can have rate. They don't have the fluff. But there was a time where you kind of wanted the fluff because you needed the help. The regulations were just astronomical and they were changing every day, every minute. And as a mortgage broker, you just kind of wanted to sell. You wanted to be boots on the ground. You wanted to help out your client. You don't have time to spin your wheels for hours a day checking what the new regulations were or are. A lot of that stuff, I think we've kind of worked through. And I think that's a good start. That's a good metaphor, is to understand, am I basically in a big bank paying retail prices, or am I meeting with this broker like me at Starbucks and I'm probably wearing sweatpants perhaps, but I'm getting your deal done for literally, I don't know, on average, they say a broker can beat retail by almost $10,000 in cost per file. That's our average.
Wow. Kristina, before we move on to the next question, you have anything to add?
No, I don't. No.
Great. That's awesome. Well, thank you, Joe, for going through that. The next question was submitted through Instagram through the Spark Collective. And Kristina, I'll open the floor up to you first. Is what are the benefits of using a personal lender instead of an online service?
This is a really good question because I think with technology and AI, and I actually had a client, this was years and years ago, but they were with an online lender, and they didn't have the ability to call anybody, but they were able to get like a really low rate at a really low cost. And they needed help and they had questions and they weren't able to get a hold of anybody. And especially sometimes when you sign off at 5 p.m., you might still be in negotiations when you're trying to submit an offer on a home and you need answers and you need to make sure that everything is lining up. And so I think what it comes down to, for me, I personally like working with a local lender that is not just a person, but it's a person, but it's also not a portal. And so, you want to be working with somebody who knows the Denver market, who has access to programs and resources like down payment assistance, who knows how to work with unique income. It can really walk the numbers with you. And so you can really understand. And you may be able to get a solid rate with an online lender, but at the end of the day, what it really comes down to is personalized service and relationship building and really having access to that person who is going to advocate for you every step of the way. And it's not just going to be from a 9 to 5, but also we're going to be available at any time. You can call us at any time. You can pick up the phone and ask, all of the questions, because buying a home is one of the biggest purchases you're ever going to make. And it's nerve-wracking and it's exciting. And there's just a lot of emotion involved. And so you're really going to lose that high-level touch with an online lender versus working with somebody who also is really committed to working with you every step of the way. So that accountability and transparency is really huge, because we are invested in working with you every step of the way and we want to guide and support you. Whereas you just kind of lose that with an online lender. And I think flexibility and responsiveness, and then also just knowing the local market is really important, because as a lender, we're going to work with your realtor and we're going to go into negotiations together and we're going to work as a team. And so I feel like you just really lose that when it comes to an online lender. And so when I was talking to those clients, I mean, they had so many questions and they weren't able to get a hold of anybody in the midnight hour. And it was really stressful for them. So I think that kind of helps give context really between an online lender versus a local lender in person. Can make a big difference.
Yeah, for sure. I think I always try to say it this way. If you're going to spend hundreds of thousands and millions of dollars of your money, is this something that you're going to want at least two people, if not more, in your corner, fighting for you, answering all your questions, you know, maybe not 24 hours a day, but pretty close to it.
Yeah.
You know, would you want that assistance there? And again, especially if you've done 5 or less real estate transactions in your life, if you're a first-time home buyer, if this is your first investment property or whatever, having those people in your corner and available to you at all times is extremely important.
Yes.
Now, if this is your 53rd real estate transaction and you have 40 properties throughout the country, maybe you need a little less personal service because you've been through the ringer, you've been through all the ups and downs of your own transactions, and maybe shopping that rate through an online lender, it makes a little bit more sense for you.
Yeah.
But it's just a matter of understanding where you're at, what you're going to think. But like, even for me right now, I know a lot about mortgages. I'm a real estate agent, but if I make a real estate transaction, I am using a mortgage broker because I want them in my corner, answering my questions, all that, because there's a lot of stuff in a real estate transaction I don't want to do. And that's why you have those people there for you. So
absolutely.
Yeah.
That's why working with a realtor is so important as well, especially if, there's a homeowner trying to sell their home. Do they want to take on that responsibility of trying to sell their home themselves?
Yeah.
There's a lot to it.
There's a lot more to it than people know. But again, there is a lot of technology out there that can walk you through the steps.
Yeah.
It's just a matter if you actually want to complete those steps yourself or not. And you feel like you're equipped to do so, So, Joe, you got anything to add?
I think, kind of what Kristina said is key is, I don't know too many realtors that pull their buyers aside and are like, yeah, you should just log into Rocket Mortgage and good luck.
Yeah.
I've definitely had a couple clients that call me and they love to just go on and on about how they're shopping me with 9,000 other lenders throughout America. And it's like, awesome. Good luck, dude.
Yeah.
Let me know how it goes. If all you care about is rate and cost, you're going to find it.
Yeah.
And you're going to headbutt a brick wall for about 30 days. And you may get it through. And sometimes I'll tell people too, I'll be like, you know what? You are the best candidate for actually getting through like a Rocket Mortgage type situation. Like, your situation is just very simple, and you have lots of money down, you have a good credit score, you're salaried, go butt your head against a brick wall. That's fine. There's other people that I'm like, call me in 2 weeks when this thing just implodes and when you're about to jump off of a cliff.
And I think it's, to kind of piggyback off of what Joe is saying, it's so important, because us as a mortgage lender and mortgage broker, like, we are going to advocate to make sure that your deadlines are protected, right? And there's deadlines in the purchase contract that we need to make sure that we're staying on time and ultimately protecting the buyer's earnest money and making sure that we can get them to the finish line. And so when you are working with maybe a larger bank like Wells Fargo or Chase or like an online servicer, there's just not that investment in making sure that, sometimes that you may not be protected.
For sure.
Yeah.
Well, thank you for that. All right. Well, Joe, the next question came from Megan Lynn, and she emailed me. The question is, what is the single most important factor to consider when determining how much house I can afford beyond just the mortgage payment? For example, how do factors like property taxes, insurance, maintenance costs, and potential HOA fees impact my overall affordability?
Yeah, that's a good question. So let's just kind of answer this like a robot to start, and then we'll kind of expand on that. But obviously, the debt to income metric in lending is pretty simple. And let's just kind of come up with an example. Let's say that I have a salary of $120,000 per year. Therefore, I gross $10,000 per month. The lenders are going to let you spend half of that, 50%, 52% if you're in the FHA space. Let's not even discuss that. Let's just go with 50%. So that means I can spend $5,000. Okay. So $5,000 means that my entire mortgage payment, including principal, interest, taxes, insurance, mortgage insurance, and HOA fee, all 6 of those go into your housing. I'm also going to pull your credit, and I'm going to look at all of the minimum payments that you're paying on all the other debts that would come up on a credit report, right? So lenders don't care about your cell phone bill. They don't care about your Netflix bill. Nobody cares. If you don't pay those, they just stop the services and they don't put a lien on the home, right? But everything on the credit report, that can actually put a lien on the home. Okay, so that's why they care about it. So that's the answer to your question is obviously, if I'm a robot and I'm grossing 10,000 per month, okay, I can spend 5,000 on my whole thing. Okay, we got it. Now, what's interesting about that is that you think about the taxes, right? You think about the benefits. I think most people that are grossing 10 grand, right? Would they take home any more than maybe 6,800 benefits and taxes?
Yeah.
So you got to put yourself into that situation. Do you really want to max your debt to income out just because the lender said you could spend 5,000? If I've got a mortgage payment of 5 grand and I have no other debt, but I'm taking home, say, $6,500, okay, you better think about that. That's not a lot of groceries. That's not a lot of time out. It's not a lot of gym memberships. You're not playing basketball with Adam on Wednesdays, that's for sure. Blah, blah, blah. So I think you got to be thinking about that. You got to be thinking about your take home, not just necessarily what the lenders can do for you. I think at the same time, and this is going to get deep. I don't want to take too long on this without it getting long-winded, but you've got to think about your life if you just continue to rent. You've got to think about your life overall too. There is going to be, in my opinion, people that will be house poor for perhaps a good 2 decades of their life if they eventually want to have 2 decades of their life where they're doing what they want to do in life. And they're not working and they're not grinding it out, just literally trying to make ends meet. Social Security is never going to get you there. The $300,000 that you have in your 401k is gone. It's nothing. What's really going to create that generational wealth and your ability to basically retire is maybe getting into 1 or 2, maybe 3 homes during the young years of your life, the hardworking years of your life. And all of a sudden, those 3 homes are worth $1 million 20, 30 years from now. Yeah. And now you've got $3 million in the bank that you can actually retire with and actually do stuff that you want to do every day. So I think that's important too, is just affordability is important for comfort, but just don't forget that the great American dream is that you can have 2 or 3, 4 homes when you're, the proverbial 65, 70 years old, and you've actually created some generational wealth.
Yeah. And hopefully by that time, that home maybe even be paid for, and you're just cash flowing and your housing costs when you're 65, 70 years old, besides your property taxes every year and your home insurance are zero.
Yeah.
Correct.
And so it's not a mistake. It's not a coincidence that the most wealthy people in this country own a lot of real estate.
Yeah.
And second, it's also not unique in the fact that if you have less debt when you're retired or want to retire and whatever, it's going to be a lot easier for you to maintain the lifestyle that you want when you don't have a mortgage payment or a rent payment or anything like that, because you've paid off this house or you have other properties cash flowing to pay your mortgage on your primary residence and so on and so forth. Now, getting back to Megan's question, I think lenders and brokers will tell you that you qualify for this loan. Joe alluded to it a little bit. Just because you qualify for the loan doesn't mean you're comfortable with that loan. Nobody, a real estate agent, mortgage broker, nobody can tell you whether you want to pay that bill every month or not, or you can, because only you knows, I do like to eat out 4 days a week, or I like to go on 3 trips a year, and maybe this actually doesn't work out. So some of that factor, yeah, we can do all the numbers for you. We can show you what you qualify for and all that. But some of that is just, you have to be willing to know that you're going to make that payment every month or not. So,
Yeah, absolutely. And I think it comes down to, a conversation that I have with friends and family and clients. It comes down to like budget and mindset, right? So yes, there's the mindset of, okay, I'm going to be going higher in a monthly payment versus like what I'm paying in rent right now. But then also just really focusing on, okay, what is that max comfortable payment that you're comfortable making on a mortgage, that we need to kind of focus on. So those are, very two important things to focus on. We never want to be house poor, but kind of figuring out what you can kind of make work to make it happen.
Because a lot of things to consider as well is when you own the house is appreciating and you're making money just like you would in an investment account every year, especially in Colorado. You're going to make money just owning the property versus paying rent, so if it is a higher mortgage payment than the rent payment, is the appreciation value part of that. All the other intangibles of just, hey, I know I'm going to have this house 3 years from now. I don't have to find another place to live 6, 9, 12 months from now. So there's other kind of things to consider when you're doing that. All right, well, let's move on to the last question for this episode. Kristina, it's going to open up to you. You got a text from Jen Plord. Her question was, do you offer a service like a one-on-one consult where they do a deep dive of financials and you charge them a nominal fee for your time? And then the second part is, and do they need to send you a checklist of their finances that you go over as well?
Yeah, absolutely. I love this question. And definitely something I like to try to specialize in, especially just around financial strategy and financial coaching. But I had 2 single women homeowners close this past summer that I started working with. One I started working with 2 years ago, and the other I started working with a year ago. And about, a year or 2 ago, we did a home buyer consultation. And so that's really where we, kind of do a deep dive into the finances. And this is free. So this is a free consultation. So we're going to look at credit, income, down payment, and employment. Those are kind of like the 4 factors that we really try to focus on. If you're trying to buy a home, it's never too soon. So it's like if you are a year or 2 out, I started working with these women, and then we started to put kind of some like goals and focuses in place. So it's like, okay, you need to work on your credit score. You need to save this amount of money. These are the things we need to kind of put into place to get you into the position to wanting to buy, because what you don't know is what you don't know, right? Until you know. And so really kind of sitting down and having that consultation can kind of really help bridge the gap from where you are and where you're trying to go. And so both of these women, were very motivated. They wanted to own their own home. And so they put the steps in place and were very diligent and disciplined and saving the money, working on the credit score. And then also with this is we were at a lower price point when we started working 1 to 2 years ago, but then they also made income changes, meaning their income improved with their job. And so that also opened up just way more opportunity to kind of get them to the purchase price that they were really wanting to be at. And so typically we'll do a home buyer consultation that can typically be, I say, about 30 minutes. And then from there, we can do financial check-ins. And so maybe we check in every 6 to 12 months, depending on your timeline. And then if, I do work with clients kind of outside of real estate, if they do need more in-depth like financial coaching around credit, budgeting, and saving, I can kind of help clients with that, where we kind of do a little bit more deep dive, and that's a little bit outside of real estate. So.
Yeah, for sure. I think if you find a good mortgage professional, a good real estate agent, what you'll find is they're not there for you just for the real estate transaction. They have a heart to actually guide people through things. And so whether that, like you said, your timeline is 12, 18, 24, 5 years away, getting that plan in place with those people allow you to understand where you're at today and where you want to be and all the steps you need to take to get there. And even if that seems like something where, like, I've helped a client set up an annual budget. That's not necessarily my job as your real estate agent, but what I know is I actually care for you, a person, and I want you to be able to get to your goals because I like people helping people accomplish their goals. And if that means that I have to help you set up a budget or do whatever, I'm going to do that just because I think that's part of the personal service that a lender or a real estate agent can provide. And that may be going above and beyond, but I'm definitely okay with that. I think that every person in a service-based role should do so. So
Yeah, absolutely.
I mean, that's what we do for a living. I think that's the ultimate thing. I thought it was funny that Jen put, and do you charge like a nominal fee? We should. We don't. I think that people need to respect that too. There's not a lot of businesses. There's not a lot of businesses where we offer so many hours of wisdom, guidance, expertise, truly caring. And yet, if you just decide to go with your sister or brother who just got in the business, we don't get paid a dime. And, any lawyer in the world would talk to you for 15 seconds and send you a bill. It's not really fair in some ways. And I don't really like how the industry does that. But at the same time, it's like, I think you have to let your customer understand that too, is I care. And I tell people that. I go, I hope money gets to my bank account when this whole deal's done. That's great. But in the end, if you say Joe Selander cared, he really cared about my situation and was fighting for me, that's a huge win for me. Yeah. And I think if you don't have that personality, you're never going to make it in the lending business and definitely not the realtor business.
Yep.
Absolutely. Sure. Yeah. I can relate to you, Joe. And I mean, and you've obviously been in the industry a long time. So it's like, literally we've been financial coaching people for 10 to 20 years. And it's kind of part of our business model, really.
Yep.
Well, before I add the parting thoughts to this episode, do you guys have anything kind of to add about our kind of heart behind this series and this kind of panel discussion, like why you were willing to show up for this?
Yeah. I mean, Adam, I just want to say I'm really glad that you're doing this because I do work with a lot of first-time home buyers and I do work with a lot of, the younger generation. And so when people go online to Google something around mortgages or what loan programs, it's so inundating and so overwhelming that people, it's almost they just get decision fatigue. They have no idea what to do. So if we can really create just an access point and make it accessible for people to have just really clear, authentic, and transparent information about the world of mortgages, but also just making a space where it's like safe and intimate for people to be able to really learn about this, I think is so needed. So that's, one of the reasons I'm doing this. And thank you for putting this together. I think it's really needed.
Absolutely. Well, good. Well, I guess what I want to ask each and every one of you that is listening is, like Kristina just said, we're here to actually be of value and be of service to you. The way we are able to do that is when you submit your questions. So do not feel shy about submitting your questions. We just answered 4 questions today from 4 real people that had questions just like you do. So don't be embarrassed. Don't be ashamed that you don't know the answer. There's lots of things I don't know the answer to, and I just ask questions and hopefully I figure it out. But we also incentivize you to submit your questions. So if your question is picked and we answer it on one of these episodes, you win a $25 Amazon gift card. So we'll be handing out 4 of those after today's episode. So all of our contact information, Joe, Kristina, myself's contact information is going to be in the description, all of our social media accounts. However you want to reach out to us and submit your question, please do so. It really helps us understand where you're at and allows us to answer the questions just like we want to. So look for all that information in the description. But besides that, thank you for listening to episode 1, and episode 2 will be coming soon. Thanks, guys.
Thanks.
Every time I flick the wrist, you can bet that it's a switch. Realtor for hoopers, welcome to the main event. I'ma give the people what they ask for. Whole squad moving like a task force. We move with military precision, accomplishing any mission. In 2020 division, just don't see no competition, don't see no opposition. We on top of the game, we not one and the same. I'm Stephen Curry, the range, I Allen out with the cross. I'm Kobe Bryant, the fade. I'm one that's calling the plays. Now what else more can I say?